Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. If you are new here, please do consider subscribing, ringing that bell, and hitting the like button. I thank you for all the people supporting the channel so far. Good afternoon, Patrick. Good evening, Anissa. See some other people hiding in the background. Hello, hello, George. AP World, yo, 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 down we go. Well, thank you for tuning in. Little pullback today. Another 1.5% pullback. Hello, Chris. Hello, Connor. Again, everybody coming back. Hope everyone had a good little break from the markets. I was just looking up something. This is the 57th decline of 1% or more this year, the most downside volatility we've seen since 2008. And there we go. Boy, if you can survive these markets, you're on good footing. That's why reward to risk ratios, proper stops, putting probabilities in your favor. If you don't have anything to do, sit on those hands until they turn numb is the thing to do. All right, we had the Dallas Fed Manufacturing Index coming in still negative, a little better than previous, but still negative. The big whammy was Bullard speaking today. Still thinking the market's a bit too dovish. And throwing a little, tried to bounce this morning, and then we got the Fed speaky, throwing the cold water on that rally and rolling over. You can see just healthcare holding up. Well, Amazon held up a little bit, but everything else was red. Walmart, a little bit. Not many other areas to hide. Apple broke that key support level, closing below it. We got potential double tops in Microsoft, AMD, Nvidia, just to name it two. Google. So we're going to have to see how all this plays out. You can see here the sectors. There was nowhere to hide on the overall sector. There's not even a great sector to hide in. Healthcare did pretty well. Consumer defensive, again, those holding up the best, but real estate getting sold. Energy, actually, oil did bounce a bit, but energy stocks pulling back. Basic materials, technology, leading it on the way down. 67% for that 50 basis point hike. Still thinks it baked in, but the probabilities have been shifting up for the 75 basis point, but don't think that's going to happen. Think we're stuck with that 50. Still in greed mode. Earnings, nothing going on after the close tomorrow morning. And another weak sauce earnings morning. So nothing I'm really focused on and nothing that's market moving. So we don't need to cover it unless somebody wants to look at something. George shorted the S&P and NAS on Tuesday. Should have shorted on Friday. Well, there you go. Timing's everything in these markets. Tactile trading. Thought you were saying that Friday was normally a down day in your research, but you shorted on Tuesday. What's going on there? All right, so I was watching this going into the close. We're still not technically closed in the futures, 20 minutes to go, but this key 39.64 level, we're holding above it. Why am I watching that? Because a close below that 62.5% harmonic would then favor the return to the 87.5 from probabilities, which is right at the bottom of the daily rotation zone. So we're still a fair ways off from triggering the double. And even if that double triggers, look, I mean, we could continue lower, but it's going into some key support. I'm not saying that that double won't have a substantially bigger pullback. However, that just takes us to CPI Thursday. Everybody remembers CPI Thursday, the huge celebration. The huge celebration from Consumer Price Index coming in a little better in the sevens. That would just wipe out that. Would take us back down potentially to just above the opening area of CPI Thursday. Daily cycles rolling over. It looks like it will be confirmed with this close. So that's where we sit from the macro levels, from the little overnight thing. Got a little buying stepping in right now. Remember, I watched for the reversals between the 50 and the 62.5. So the key area we'll be watching overnight is 39.80. On a rally above that, I'm going back to the breakdown zone, 39.98 to 4,000. Those are my two top levels. If we roll over besides this afternoon low, below this afternoon low print coming in at 39.60 and a quarter, I will be targeting this other support shelf right in front of the 75% harmonic. Then that's at 39.46. So 39.46 to 39.50 will be what I am keying on for major support overnight. Let me fix the coloring of the level. There we go. And then then if we can, even with a 4-hour close below here, I'd really start targeting the return to 39.29. The Spiders has a lot of open interest at 390 and 385 for what? The calls or the puts. Don't have those in front of me right now. Or both. Which is it, Connor? Short at the end of the day, you thought the week would go red. Well, now you're getting your red print. Virtually wiping out most of... You should be up on your position at least. Hey, Michael, thank you for being here on the puts. Thank you for clarifying, Connor. So you're talking on the Spiders, the 385s and 390s. Well, I'd really be focused on this 390 level because anything below there triggers the double top, and then those 385s would come into play. So that will be interesting. Let's see. We got potentially turnaround Tuesday tomorrow, or is it going to be tanking Tuesday? Turnaround or tanking Tuesday? What's going on? I forgot to go over. Nobody called me out on that. I didn't go on over the economic calendar for tomorrow. Huh. Wow. And nobody called me out. All right, who's going to be in charge of calling me out if I miss something that critical? Tomorrow we got Red Book starting at 755. We got the house price index at 8 still. Housing isn't going to be driving the market right now. Consumer confidence, though, at 9 is going to make a difference now that Black Friday and Cyber Monday are out of the way. And on an inflation-adjusted basis, the sales were not good. Pretty big miss on an inflation-adjusted. Just as a headline number, sales because of inflation were up year over year. But on an inflation-adjusted basis from so far Black Friday and the weekend, they weren't good. We'll have to see if Cyber Monday can bring home the bacon. Also, we have, what was I going to say? Oh, man, I just blanked out. I said also too many times. It was something about Cyber Monday. I'll remember in a bit. I will remember in a bit. We have the Dallas Fed Services Index tomorrow, and then that pretty much wraps it up. The key thing I will be watching is 30 minutes after the open, consumer confidence numbers. Oh, I remember what I was going to say. Also, longer-term financing for purchases, especially big ticket items, is up substantially. So delaying I want to finance this out, with things like Affirm and everything else up substantially, not strong for the consumer. I think this is the consumer's last hurrah, and it is not going to be pretty in first quarter of next year. That's what I wanted to say. So, well, we got Powell. Yes, we have Powell speaking on Wednesday. The little mini double is invalidated now on the NASDAQ. No one will care about it. What elections are you talking about? I know Elon's fighting with Apple now. I'm not going to comment. Tourniquet Tuesday, so it's going to save the market. It's going to, what? Are we going to stop the bleeding on that? Skew index is showing a lot of fear. That's the only thing that I'm is very interesting is the put call ratio still favors some continued rally. But NASDAQ down day holding critical support also. I was watching to see where it would close relative to last Monday's close, because that was the lowest close since CPI Thursday. And with 15 minutes to go, we still look like we're closing above that level. So key critical support still holding. And no, we don't have a potential double top. And now even if we did rotate back up, it would not be, it would just be a horizontal channel. So we'd start watching for the horizontal channel breakdown. Cycles look like they're starting to roll over on the NASDAQ. The Dow, the drop in the Dow, back to the rotation zone. Still above this key support level of 33, 750, 760 area. That's what I'm watching for tomorrow. If we did drop below that, we have minor support. Minor support now coming in around 33,570 and major support at 33,219. So this is the support zone I'm watching up here between 33,750 and about 33,570 to see if we head lower. That's going to be my key support zone. Russell, on the other hand, is closing below this Thursday the 17th low close. Well, yeah, it was Thursday the 17th. I was just double checking. It was not Monday for the low close on the Russell. So the Russell can't hold the support level on a closing basis. Back below the rotation zone into the CPI candle. So I'm watching it tackling 1812. That would be a nice overture if it hit 1812. Key resistance now, 1857 and then 1878. Oh boy. Let's see. I've been looking for a few companies that sell in USA only, which if the merger doesn't take place, that is ACI, that I think people will still buy food or cook to eat at home. Interesting, Michael. Like Bob, I'll leave it open to the interpretation. I'll be right either way. See, if you haven't learned anything from Bob, from his TV appearances, you leave it, you get a little too specific, you can get nailed down. The last time the skew was this high, the ES hit its August high. That's good information, Connor. Thank you for reporting the spam, George. All right, the DAXI into the daily rotation zone and closing below the key support. My next pullback level is roughly about 14,200 and then 1452. Notes, tried to rally, still double top in play, but we have the rotation zone still in the way. So key support, if we drop below 112.27, I'm focusing more about 112.22 and then 112.16. Lots to chew through before this. It's still, we have the double bottom that's triggered and hit the stop reduction. So still sitting right there. I'm surprised this didn't pull back bigger with the Bullard comments. So we might actually see more of a substantial lows holding. Dollar, big reversal with the Bullard comments. The double bottom is still in play. This did not invalidate anything. Remember, we dropped below the 200 now and rallied up and even closed in the rotation zone. So The key level I'm watching on the closing basis for tomorrow is 106.60 area. A close above that, we should retest close to the upper end of the rotation zone and possibly trigger the double bottom. It's going to be interesting with that going on. Euro sell off here, closing above the 62.5. So still the close didn't favor the return yet, but this would be a front run potential double top pattern if we did get that close above the 62.5, because that would favor this lower areas. And then the close below 102.22 triggers a bigger sell-off potentially. Pound, decent reversal there. Back to the 1967 area. I'll be watching for a secondary reaction and then seeing if we're going to set up for a potential short in the pound. Bitcoin, nothing going on. We have more crypto carnage with bankruptcies. More bankruptcies. The VIX gap up, a closing below that 22.30 area. Still, we'll be watching to see the next pullback, and that will gauge the amount of fear. But this is where I will start now watching for the bottoming pattern to come in. And then we could, especially if those double tops trigger, we could see a little ramp up so far in the VIX. Crude, now it would be aggressive buy above today's high, but that would only signal a return into the rotation zone and would be a potential front run for the double bottom. But that is super aggressive, especially with the close below. Here's now was your key support and closing right at that level. Not able to sustain a close really into that level. So I will be watching for an intraday break above today's high. Gold, pulling back. The key area to watch is the low from last Wednesday. Breaks the low from last Wednesday. You could see coming into this sort of advanced clear path move, we could see a much bigger retracement there. Tesla rejecting from the 62.5 level. So not any follow through just yet. Filled that gap and then rolling over. The breakdown play for tomorrow is below 179. And there's still a gap left behind. Apple, the old Apple. The key level I was pointing out was this 144.80. Closing below it. Closing below it. So we start breaking today's lows. Targeting 141.58. A close below there. I'm targeting 136.78 at a minimum. And then the potential gap fill. Remember, this is a red candle. So the gap, you'll probably find some support at the open. But the key support, the key for a full gap fill is to the close, 134.87. Other notable things. These are things I'd put on a watch list because it could help confirm, especially if some of them trigger early. Microsoft double top in place, needs a close below 237.63. We went over NVIDIA before this morning, but that still needs to close. Nothing has changed. That needs to close below 150.80. Other ones, we have AMD. Potential double top needs a close below 70.16. Lots of similar patterns. They don't. Let me just do it on Google. I think, yeah, Google or Google. I had it on Google. Even though it's a little flat, it does qualify. So a close below 94.05 on Google, GOOGL. You remember you have a gap left behind here, but that would trigger a double top and an eventual potential gap fill. And even below that, you have another gap from Friday, the 4th of November to Monday, the 7th. So we'll be paying close attention to some of these with cycles rolling over. Lots of interesting topping, I should call them potential topping patterns. None of them may trigger. The warning sign so far to me was Apple breaking down, but that was not, unfortunately, a double top. Hey, Balaji, can I check on Meta? Yep. Shoot. The key level I'd be watching on Meta, it looks like, would be about 107.25. You start getting the close below there where below this key gap open, and you still have a gap left behind. So that's my key level support I'd be using. It's roughly where this 37.5 harmonic is with that key gap open. And then that would take us for the gap fill between the 50 and the 62.5. You have other gaps lower. The next key level I'd be watching on a closing basis would be 99.58. And then we'd have the gap fill to 96.47, and potentially, because you got the close below 62.5, targeting the 87.5 area, and right below that you have the gap fill to 90.79. So if you're in anything Meta long, again, can't give specific trading advice, but I know where my key stop level would be on a closing basis. Why? Because then we'd start the breakdown play below key support into potential gap fills. And I wouldn't want to ride this all the way back down with daily cycles rolling over. Also remember, against the weekly rotation zone with the weekly cycles at the top. So why wouldn't I just exit now? Because we haven't broken key support. So even though everything's gone flat, it's still in a consolidation phase. If the markets can pull something out of the magic market hat, you could still theoretically see another push higher and invalidate a lot of those doubles I just went over. That's why I would wait for a number of things to start triggering, because there's plenty of room to run to the downside without potentially front running anything. Hello, options 22. See you tomorrow, George. All right, so there's lots of little things. Not seeing a lot of great bullish setups. Very few bullish patterns setting up right now. That's another thing. Also, on this bigger snapback rally, 90% of the S&P, I think it was, the stat was above their 50 again, the 50-day moving average, which is generally toppy territory. Does that mean new lows? Nothing here is for new lows yet. It's for potential bigger pullbacks, but no new lows yet. The key level to watch for new lows. The key level to watch for new lows that I am utilizing is about 37.07. which would also take us potentially on a closing basis below the November 3rd, definitely the November 3rd close, but possibly below the lows. And that would take us back to even below the trigger point for the inverse head and shoulders. So that's really the critical thing, and that's well in front. Well in front of that, we have the double top, potential double top could play out, but that's the key line in the sand. This is where I will look at for more aggressive shorts for tackling this low price. Also, what's interesting here, technical analysis you'll get nowhere else. Remember, below that 62.5 on the closing basis is targets the 87.5 to 100. But look where those are. Look where that 87.5 to the 100 is. Into a candle wick. And below all this key closing support. If I go to the chart, so many people ignore, but I think it's very handy. You see all this area. Look at the close, 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 close. Look at all these closes right in that area. So if we came back down and eventually get that close below 62.5, look what you're targeting. And into this area, you are below that key closing area into a single candle wick. All right? This could be a little free fall area. That's where stuff gets really interesting. So that's why I'm watching that 3,700 right in front of that 3,700 area like a hawk. Like a hawk. Because you even see it back here. Back here from the October 13th. You just have that one little support structure in there about 35.40. That's it. The take you won't find anywhere else. All right. Can I check gold? Thank you for being here, Mohammed. Can I check gold? Sure. I went over it a bit before. The key line in the sand I'm utilizing at this point, still on a closing basis. Pay attention. Not enough people pay attention to closes. The closing price is the most important price on the bar. So you see here on gold, Monday the 21st, you got a close at 1739.60. The next day, Tuesday 22nd, a doji day. What was the close there? 1739.90. So these were the two low close days. Look at today. Still holding above that. Holding above that. And that little area, let me bump this down. You see this key area right here gives a support window. Closed in that support window twice. Today closing right at the upper edge of the support window. So the early warning sign is below 1734. Below 1734, over here you have a clear path candle and you have a wick. You don't have a lot of support down until the lows here. The lows of 1719? Just double check that, 1719. And we got the 50 EMA right around there. So your early warning sign below 1734. Your critical juncture, this 1719 area. A close below there, we could see a pretty rapid return to the lows, especially with the dollar strength. Remember, gold took off with the dollar weakness, and now we're getting dollar strength coming in. If that double, this is why you need to pay attention to other markets. So keep the dollar index up here. Why? Because if you get especially that close above the 62.5% on the dollar index, can be a really strong signal that gold may continue lower. And if the dollar index triggers this potential double bottom above 107.60, you could see even more pressure on gold. So those will be other indicators you can watch. From a retracement point of view, your key major critical on the sand is going to be 1683.40. But I wouldn't want to be riding it down to that level. Especially off this nice breakout move, especially if it breaks below this key support zone, I wouldn't want to be riding it down. So please keep that in mind for gold. Remember, gold to me is trading around a core position. You don't want to get married to it. You want to take some profits off on these pop moves and then look to add when things get to an extreme. We got to a couple extremes down here. Now we've had a pretty decent run up. Would I just be abandoning a position at this level? No, because we haven't yet closed below some key levels. We start closing below those key levels, I'd be more rapidly unwinding and then looking to add back at some lower prices. What would be, well, you know where I'll be watching first level for the VIX Connor. First stuff, we're trading against the breakdown level. So you're watching 23s. That's above the breakdown level. That will get me peaked. The real area I'm watching is about 24, 25. Then we could really start getting some acceleration back up. All right, everyone. Thank you for tuning in on this fine Monday markets. I will be back tomorrow morning for the see if we're going to get the Tank It Tuesday or the Turnaround Tuesday or Tourniquet Tuesday. We shall find out. With that, everybody have a wonderful night, and I shall talk to you later. Bye.